Hey fam, welcome to episode 2 of Good, Bad, and the Ugly. I'm here today with my friend Edwil. How are we doing today, Edwil?
I'm good, Mr. Jose. How are you and how is everyone else doing? Hope everyone else is doing just fine on this lovely Friday afternoon.
Doing great. Been looking forward to this call since we got it scheduled for over a week. Grateful that you can be here today. Just from a standpoint of getting people to know who you are, can you tell us a little bit about yourself?
Sure. My name is Edwil from Vallejo, California. And I am a hard money lender, actually a funding source. I like to consider myself a funding source because I'm a hard money broker. I also assist my clients with getting gap funding. Now, it's not my money. I wish it was, right, Jose? Someday, hopefully, it will be our money. But at the moment, I connect private money lenders with those who are requesting for gap fund. I'm a source for those two things. Also, for wholesalers, or even investors, if you have EMD needs, we can help with that as well.
But you're not just a hard money lender. You've invested in other types of deals as well, correct?
Yes. I'm actually also an investor, so I know how it is to apply for loans as an investor. I've experienced. I was actually an investor before I became a hard money lender, so I went through the process of applying for a hard money loan, going through rehabs. So I know exactly what an investor looks for and is hoping for to obtain a hard money loan.
Things that how to evaluate properties and how to do budgets, scopes of work.
Yes.
So this episode right here is about what is a hard money lender and what would you need to do to qualify with a hard money lender. I'm going to kind of let you have the floor, explain what a hard money lender is, why would somebody want to use a hard money lender, maybe some pros and cons.
Absolutely. Yep. Hard money it's actually easy money, not hard money. Hard money is it's the term used because the rates are comparatively high versus a conventional type of mortgage. For example, if you buy a home, it has a certain rate. Well, hard money is actually a loan that'll allow you to purchase a property that other banks won't touch, because it allows you to obtain, not only acquire that property, but a hard money loan will also give you the funds to fix it. And it's all in one loan, which is really, really nice. And by the way, I jokingly call it easy money because it's actually easier to qualify for it. The big thing is the property itself. If you say you're going to acquire this property and you're going to fix it, and after you fix it, it'll have this kind of a value. And if the numbers look good, lenders will. It's easier basically to qualify for that type of a loan, as long as the deal itself makes a lot of sense.
What kind of factors go into that? You say to qualify.
Oh, that's a great question, Jose. To qualify for a hard money loan, like a lot of things, it's risk-based. The lenders will want to know, number one, what kind of credit score you got. Number two, they're going to also want to know what kind of experience you have. And number three, and probably the biggest part, is they're going to want to see the property that you're going to be, that's going to be your project. They want to see what the property looks like when you get it. They're going to want to see what you're going to do with the property. And they're going to want to know, once you do what you want to do with the property, how much is it going to be worth, and also how you plan to exit, how you plan to either sell it or rehab it and refinance it. Because a hard money lender is typically, it's temporary money. The lender is going to give you the money to acquire the property and do whatever you need to do. And then in the end, probably right around 12 months, sometimes 18, sometimes sooner, 6, the lender is going to want that money back. That's why it's a temporary loan, and the lender is going to want to know how they're going to get the money back.
Let's say there was a person that was looking for a hard money lender, but they've had some bad luck, and let's say their credit score isn't that great. Are there ways that they can work with you to find products that are available to them?
Jose, that's a great question. And in fact, I do run across a number of people who've had checkered credit, but they still want to be investors. They want to stay in the game. And there are products that can do that. We have one lender, or actually a couple of lenders that we work with, where if you can explain what had happened, they can qualify you still. Also, we have lenders that won't even check credit. they will base their decision to lend you the money on the property itself, and it's called asset-based lending. They're going to take a look at the property. They're going to see what you want to do with the property via what they call a scope of work. They'll take that property, the scope of work, and when you fix it, they're going to want to see what the property is going to be worth after you do that. If there's enough equity there, they feel pretty safe. They'll lend the money.
You say that you can do the repairs as well. That's not money that's given to them all at once, right? How does the repair cost, the money that you lend for repairs, how does that work?
That's a great question, Jose. What happens is, let's say you're going to buy a property for $100,000, just for simple number's sake, for $100,000, and it's going to take $50,000 to fix it. What'll happen is that $50,000 that you're going to use to fix it is held in an escrow account. And what'll happen is the lender will give you that money in stages. Just for real basic explanations, once the property is sold, let's say that $50,000 is in an escrow account, you will first have to fix a certain part of do a certain percentage of the rehab. And then once it's done, let's say you do 20% of the rehab, you will let the lender know, hey, I'm done with 20% of it. Please take a look because we'd like to get reimbursed on the money that we have spent. If that is good enough for the lender, they'll send somebody there, they'll take a look at it. They'll say it was done in a very workmanlike manner. Here's the money you spent. And then you continue the process.
Some people, that are watching this channel that are maybe new to investing, like, well, I don't have any money, so how can they reimburse me? Do you have lenders? Because I'm not sure you mentioned it to everybody, but you're a mortgage broker, right? Mm-hmm. You have different lenders you can go to. Do any of the people that you work with do what they call like a upfront, like a small little get started check for people to get started so they don't have to come out of pocket for everything? That
we do actually, and that loan is actually reserved for more experienced lenders. Again, it's all about the risk. One of their criteria is that you have, I believe it's a 680 credit score, number one, and that you have the experience, which means you've done, and their criteria is that you've done 5 transactions in the past 24 months. And if you meet those two, what they will do, they will take, in our example of $50,000, they'll take a fifth of that, which is in this case is
$10K.
What is it? $10K? Thank you so much. I have to figure that one out.
No,
but about $10K. They'll go ahead. I know. But thank you for saving me on that one, Jose. They'll go ahead and give you 20% of that transaction of the rehab funds ahead of time, which is a great scenario because typically as an investor, when you put your money into a transaction, that's a lot, like the down payment and closing costs. A lot of us are wiped out. And then now that we've gotten the property, we're ready to go. We've got to get the contractor to do his work. And almost all the contractors I know won't do the work until you give them a certain amount of money, a little bit of down payment. And I get that. And unless you have a really good relationship with a contractor, and he'll say, you know what, no problem. I know who you are. I'll do the work, and then I'll just get reimbursed. That's a great scenario. But if you don't, as most of us do, then yeah, this lender will provide that money to get things started. There's a lot of ways to get around it. To me, Jose, if you're an investor, and to me, the biggest qualifier for an investor to get their project done is a commitment and resilience. A lot of times we're going to get a lot of roadblocks. A lot of times, but if you are persistent and always looking for solutions, if you're solution oriented, you will get that deal done.
That's how you and I typically work together, right? Because you get a lot of scenarios where newer investors are looking for some help, right? Can you share with everybody some ways people can maybe partner with others to get qualified, or some of the creative ways you've tried to help other investors get qualified so that you can loan to them?
Yes. One of the things I recommend, and this is what I would have done if I were now knowing what I know, is from the very beginning, I would partner up with somebody who is experienced. And I know that a lot of us who became investors, we took classes, we took all these courses, and we watch a lot of YouTube videos. But when it comes right down to it, when the rubber meets the road, Sometimes we're going to make a mistake, and in real estate, mistakes. When you make mistakes, it results in pretty big losses. If I were to roll back the clock, what I would do as an investor is I would go arm in arm with somebody who was experienced. Of course, you'll have to pay for that experience by maybe splitting the profits with that individual. But once you get that first one under your belt and the first one done correctly, then you can just use that as like a cookie cutter approach for your second, third, fourth, and fifth one. That's what I would do. If you were, and again, if you are, if this is your first time, and you have the double whammy of you have no money, and you have the triple whammy of you have a checkered credit, definitely partners would that's the more reason for you to get more partners involved. Absolutely.
Awesome. I've used hard money lenders in the past, and when I apply for them, they always look for some kind of liquidity or some kind of savings. Just in general, because I know you represent multiple lenders, what is a very common amount of liquidity that most of the people that you work with are looking for?
A good rule of thumb, Jose, is if let's say your rehab cost is just let's say $100,000 to make the math even simpler, right? $100,000. A lot of lenders would be comfortable if you had maybe 25% of that as reserves. Let's say with $100,000, if you had $25,000 sitting ready to access, they would feel comfortable about that. And because they know that the more experience you have, the lesser that liquidity requirement becomes. If it's your first time doing it, they're going to want to see about 25% because they know real estate. And when you dive into a project, things will happen. You'll see that expenses are a little bit more than what you expected, delays from contractors, the weather, the cost of goods. There's just so many moving parts that lenders typically want to see you have about 25% if you're a beginner.
I'm kind of pulling from my experiences here, right?
No, absolutely.
Let's say you're a newbie, you have a scope of work that says it should take 12 weeks, right? And all of a sudden here you are at month 7, right? So that's way past 12 weeks.
Mm-hmm.
And the newbie says, well, I don't have any more liquidity. I already spent my interest payments to you guys past 7 months, and I don't see this contractor finishing the deal. What is the repercussions of something like that?
That's definitely a scenario that none of us want to be in. But definitely if you have a project where you've run out of money, not a lot of lenders will want to lend, will want to help you, will want to bail you out, because it becomes a lot more difficult to lend money on a project that's going south. Because there's a saying that goes, once a project goes sideways, it remains sideways, right? That's why institutional lenders they don't like to lend on a situation like that. But if we do find ourselves in that kind of a situation, that's where your network, the people that trust you, really come into play. Myself and yourself, Jose, if you were to find yourself in that kind of an issue or that kind of a project, I would personally lend to you because I know you.
Sure.
And that's why it's important that as a new investor also to spread your network out there, because the more people the more that can on a person-to-person basis say, you know what, I trust you and I know you'll get the job done, versus an institution that doesn't really know you and only looks at your credit score and only looks at your is really looking from the outside in, and it would be tougher for them to lend versus if somebody on a personal level.
Right.
Please, that's another thing that I would do is, again, as a new investor, is I would just start calling people in my network or with other, just hook up with a lot of other investors, get to know them on a personal level, not just on a strictly business level, so that when a situation like that happens, then you have a lot more people to lean on. Awesome.
Earlier in the conversation, you mentioned that after somebody does a draw, you'll have somebody go out to make sure things are done properly. Mm-hmm. It's been my experience working with different hard money lenders that when they send out their inspectors, there's different expectations that happens at that time. I've had a hard money lender that they sent it out and they said, well, we didn't want to stop the progress, so we went ahead and approved your next draw, even though the things that were supposed to be completed from the previous draw weren't completed, do the lenders that you work with, do they have a hard stop on their draws? Like, for example, let's say you should have a bathroom and a kitchen done from the last previous draw, but there's maybe half a bathroom built and maybe cabinets purchased but not installed. Would your lender say, you know what, we're not going to give you another draw until that work is complete? Or do they also allow the project to not be stopped and continue to go?
That's a great question. And every lender is different. The ones I've worked with so far basically want that to get done, and they will leave it to you to get it done before they will lend you the funds. But like I said, every lender is different. And if you talk to them, say, hey, let's say, hey, look, I've run into a situation here, but if you can just forward me $5,000, $7,000, $8,000 to get this bathroom done, we'll get it done and get the project moving forward. Most lenders, like I said, will not, but some lenders will, especially if you just tell them, hey, here's my situation. It should clear it up in a few weeks.
Well, I only asked because I had a hard money lender who didn't do that, and I wish they had, right? Made sure that the work that needed to be done was being done. It was a very expensive lesson for me to learn. Trying to make this interview educational for people and pass on that knowledge that I've learned. Mm-hmm. That kind of leads me to my next question. I know with the hard money lenders I worked in the past, they always kind of build in I don't want to say like a slush fund, but oops, we didn't count for that type of fund, usually about 10% of what you thought your scope of work would be. Is that typical practice for most of the lenders that you work with?
Most of the lenders, yes, they do add, some add 10%, some add 15%, and a lot of that is how they see the risk. If you're a brand new investor, you'll probably see 15% added to your scope of work. If you're a more experienced investor, you'll see that number drop. However, there are some lenders who just put a pretty much flat 10%, regardless of your experience. So every lender is different.
Cool. Mm-hmm. Some of the things that I didn't know when I was starting out and using hard money, there's a lot of lending terms like points, origination fees. Can you kind of share what those are for people that are maybe be new to lending or borrowing money for projects?
Sure. Whenever you see the term points, and they're basically upfront fees for the loan. If you basically 1 point is 1% of your loan amount. So if your loan amount is $100,000, if a lender charges you 2 points, then that's $2,000 and you'll pay that as part of the closing costs for the loan. And the interest rate, let's say the interest rate on the loan is 10%. Usually during the life of the loan, when you pay that monthly payment, it's usually interest only. So usually 90% of the time, it's only for the interest that's being accrued. And when you pay the loan off, when the property is sold or refinanced, you'll basically pay the entire loan amount. Let's say it's $100,000. That's what you'll end up in, right? You'll end up borrowing $100,000. 6 months later, it's still at $100,000 because during that time, when you're making the payments, you're making interest-only payments.
Are you making payments on what you borrowed or what you have used at that time? So going back to your earlier example, right? The purchase price is $100. You're using $50K for rehab, so your total borrowing is $150, right? But let's say in month one, I'm only using $15K of that $50. Is it true to say that I would only be paying interest on $115 because I've only used $115, where I'm not paying interest on money that I haven't used? That's correct?
Every lender is different, but for the most part, it's exactly what you said. It's the money that you have used, that you have borrowed or not borrowed, but because you borrowed the whole thing already. But the amount of money that you use, yes. Mm-hmm.
Awesome. And what is the standard term that most of the lenders you work with have or will allow you to take a loan out for?
Usually it's 12 months. There are some that there's one lender that we would deal with and they only loan it for 6 months. That's just their standard practice. But if it's a major rehab and you'll need 18 to 24 months, they can do that as well.
Let me see. I know that some hard money lenders offer extensions. Do any of your lenders do that as well?
Yes. Well, for example, let's say that you projected the the project to well, let's say that the loan is a 12-month loan, and because of problems and all that, you're at the 12th month, and you just listed it. You're probably going to need another 60 days for your end buyer to acquire the property. You can ask the lender, to do an extension, and usually they'll do every 90 days. They'll charge you like half a point or 1 point.
Gotcha.
Again, every lender's different.
Of course.
Yes.
So my channel is called The Good, Bad, and Ugly. Can you share a good story of your investing or as a lender, and then maybe one that's not so pleasant that advise some of the new people that may be watching this channel to things to watch out for so they don't get hurt in the process?
Well, I can tell you my experience as an investor. I purchased property in St. Louis, and I turned that into a couple of Section 8 properties, and it's nice because a lot of people try to do the sexier types of investments, the Airbnbs, that sort of thing. But when you serve the underserved, if you will, you help the community a lot, and you can go to bed knowing that the property that you rehabbed is helping shelter families that otherwise would still be on a waiting list for homes. So that's one of the more rewarding parts of being an investor is you're helping families. Right. You can go to bed. You can, especially they would be in some sort of a bad situation, living out of their cars or during the holidays. That's the good part. The ugly part, of course, is the scenario you mentioned last time, where you're in the middle of a project and you run out of money. That's the hard part of being a realtor, an investor. It's funny. It's something that almost all of us have to go through at some point, and that's why it's really important to if it's your first time, to really hook up with a mentor, somebody who's got the experience, who can. And believe me, if they tell you an ugly story, write it down, note that. One thing I can pass on to all the listeners is the people you work with is so important. Do the best you can to vet them. And I know that sometimes we go on recommendations. Even if somebody recommends you a contractor to you, a realtor, a lender, do your self-vetting. Don't just rely on that recommendation. Ask them questions. Ask them about their projects. And that's one of the hard lessons I learned is you should dig deeper into your relationships, especially if you're doing long-term investing, which I did, going from here to California to states outside of my lovely state there.
That's some really good advice. If you could go back and tell your 18-year-old self, this would be, what would some advice would be? I would definitely jump if I knew about when I was 18. The only thing I was really concerned about was what movies am I going to watch over the weekend and where am I going to hang out with my friends. But no, definitely, I would. For my younger self, I would have started in real estate sooner. We would have made mistakes, but make the mistakes sooner and just learn from it and just keep going, because real estate is the number one wealth builder, in my opinion. And you hear that a lot. Most people most millionaires are done from have grown from real estate assets. Definitely, yep. You and I belong to many different communities. We talk about lifting each other up and trying to help each other out. We're Sub2 members, iFundWise people. Mm-hmm. I always like to end my podcast with trying to help grow your business. So if somebody wanted to utilize you for hard money lending, how would they get in touch with you?
My number is 707-652-3193. Just text me, call me. Let's see, how else can I? Maybe we should, I don't know how to put it down here, but maybe 707.
I'll put a link to your website.
That's perfect. Thank you so much, Mr. Jose. That'd be wonderful. Yeah, clicking is much easier nowadays, definitely.
Do you have a YouTube channel or an IG that they can follow you if they wanted to?
I don't. I just have the website for right now and my phone number, which I will gladly give it to 707-652-3193. But working on my YouTube, and you can also look me up on Facebook, E.G. Antolin, the letters E.G. and then Antolin, Antolin.
Awesome.
Be more than happy to help you out.
I appreciate your time. It was a great conversation. I think the listeners learned a lot about hard money, right? And now they know how to get a hold of you. And like I said, I'll put a description or a link to your website on the YouTube channel for this particular post so that they can reach out to you and apply for loans.
Appreciate that.
I want to say I appreciate you coming onto the show. I appreciate your friendship. We've been able to build our friendship over the past year, and looking forward to continue doing business with you.
Absolutely, Mr. Jose. Thanks so much. And thank you, everyone, for listening. You all have a great day.